Okay, good evening, Mr. Kennedy. Welcome to today's class. If you can hear me, can you please just say signify? You can unmute yourself and let me know if you can hear me.
Hello, sir.
Okay, thank you very much. I hope you had a lovely day.
Yes, thank you,
Okay,
sir.
so let's start the class because we are 20 minutes behind the schedule time.
I'm
Okay,
sorry,
so
it's network.
what is it?
I say I'm sorry about that. It is network.
Okay, I understand. I understand, sir. Okay, sir. So let's start with the class, sir. So the last time we talked about the last time we talk about cash flow statement where we're able to look at the theory aspect of it. So today we will be doing the calculation aspect of it. I will just do like we have like two types of preparing the cash flow statement. We have the indirect method and indirect method. So and I explained that. So today we will look at question one. The previous question I sent to you, I review it and I noticed that it's kind of higher than your standard, than your level, because it involves some terminology that you are not used to yet. For example, it involves what we call the no minority interest, that's non-controlling interest in form subsidiaries and the rest, and you are not doing group at your level. It's when you get to skills level that you'll be doing group accounts. When you're talking about the subsidiary, the parent, the social subsidiary, and the likes. So I readjusted it and I brought back another question. And this question is a past question, which is May 2018. It's past question May 2018. So if you have the hard copy with you, you can easily open to it. It's May 2018 question two. So what I'm going to do right now is I'm going to read through the question. So when I'm done reading the question, we now solve. Well, but you are required to prepare this to solve this question using indirect method. But I'm going to solve the question using indirect method and direct method. So I'll use a single question to explain the two so that you know the differences and you know the similarity between the two. Okay. So let's start the question. Question one says, the following statement of profit or loss and other comprehensive income for the year ended December 31st, 2017. So we have 2 years, they give us for 2 years, they give us for 2017 and 2018. Okay. So we have revenues, we have cost of sales, we have the likes figure given to us. Okay. Then we now have opening profit, we have finance cost. That's for statement of profit or loss account. So the second one that they give us also is statement of financial position. So they give us statement of financial position as well for 2000, for 2017. And the statement for financial position includes the current assets, the non-current assets. So we have the current assets, we have the non-current assets, we have the non, we have then we have the liabilities, we have the equity and the liability part as well. Then where we have the equity share capital and we have that to be retained earnings. So those are what we have there. So we have the liability section here. You can see the liability here. So these are the liability given to us. Then we have the movement. After that, they give us another table, a table that shows the movement of the property, plant, and equipment. It's actually have the cost. I solved this on when I did a recap on IAS 16, when I talk about disclosure. Means that okay, look at the cost and the depreciation. The cost should be on their own, the decision will be on their own, and I call it fixed asset schedule. I call it fixed asset schedule. So these are the information given to us. Every information that you need that you require to solve or to understand how the asset move can be found under the fixed asset schedule. Then we have additional information. The additional information given to us is in year 2017, a plant costing 466,000 with accumulated depreciation of 335,000 was disposed of for 186,000. So it means this information given to us means that there is disposal of assets. And I said, whenever there's a disposal of assets, it rewards. You have to calculate if there's a gain or there's a loss. You have to calculate there's a gain or there's a loss. And this gain and loss does not involve movement of what? Cash. It is what is for documentation purpose. It does not involve movement of cash. So another one that we have, actual information that we have there is included in trade payables is accrued, sorry. Included in trade payables is accrued interest of 37,000, in which 18,000 in 2016. So at 2016 is 18,000, at 2017 is what? Is 37,000. So that's okay, fine. The trade payable are the creditors for what? For planned purchase of 18,000. So they do what? The trade payable have a planned purchase of 18,000. So we are required to prepare the cash flow statement of year ended December 31st, 2017, using the indirect method. And like I said, the question is actually require you to use indirect method, but we are going to use direct method and indirect method so that we can see the difference between the two methods. Now, before we kickstart this solution, I want to recall, or I want to explain further again that any item that does not involve movement of cash will not be recorded into our cash flow statement. So in light of that, and we also remember that we said that what? That we have three headings in our cash flow statement. We have three headings. The first one that we have is operating activities. The second one that we have is investing activities. And the third one that we have is financing activities. These are the three headings that we have in our cash flow statement. So let's move on to solution. So our solution, COVID-19 Manufacturing Limited, statement of cash flow. Statement of cash flow for the year ended 31st December 2017. Now that we have this, like I said, the first one that I'm going to prepare with is the operating activities. Then the second activities is what we call the investing activities. Why the third one that we have is financing activities. Okay, so we have that to be financing activities. Okay, let me correct that. So we have that financing activities. So these are the three headings that we have. So the next thing for us is now to start. Like I said that whenever you are starting with operating activities under indirect method, the first thing is you need to adjust. You need to bring your profit before tax. You bring your profit before taxation. So you start with profit. So we have profit before tax. So you go back to your question. So you go back to your question to pick the profit before tax. So if you look at here, we have the profit before tax here. So to be for 2017, we are paying for 2017 to be 280. So our profit before tax is 280. Okay, so we go back to our solution and we put inside 280 there. 280 because it's in thousands, so we put 280. Now that we have that, the next thing for us now to do is that we need to adjust for non-cash flow transaction. It means that this before we arrive at 280, there are some things that have occurred that we have added and subtracted to it. that it does not actually involve movement of cash, like depreciation, amortization, gains, and likes. So if that's the case, when we need to adjust that profit so that we can actually get the actual cash profit that we have generated for the year. So the first thing is to do is to adjust. So let's adjust. What are the items that we have that it does not involve movement of cash? Let's go back to the question. So if you look at the question here, before we arrive at our profit before tax, there's what we call finance costs, right? Finance costs. We have finance costs. Then this finance cost, does it involve movement of cash or not? Does finance cost involve movement of cash or not? Okay, I believe you have answered yours. Okay, so finance cost is actually what involve movement of cash, but you don't know if you actually pay for it or not, because it can be what it can be apportion it can be a provision, number one. Number two, finance cost is taken away from operating activities, is taken to the what we call the financing activities, because we incur the cost because we borrowed loan, and the way we borrow loan is our source of revenue. So our finance cost will be what? Our finance cost is going to be an item that will be found under the investing activities. So let's go on with the question. So we have finance costs. So let's have finance costs here. We have our finance costs. So another one that we have there, what is the figure for finance cost? So that will be, will it be Yaket or not in Yaket? Finance cost is used to reduce the what? The profit. Now that we're adding it back, what are we going to do here is that we are going to add it back. It was initial, anything that was initially deducted from the profit will be added back. Anything that was added to the profit before that does not involve movement of cash will be deducted. So we have finance cost. So what is the finance cost that we have? The finance cost that we have there is 559. So it will be in Yaket. Sorry, it will be addition back because it was formerly used to reduce the profit. So we added back to it. And that transaction that we have is we have to ask yourself some questions as well. Depreciation. Depreciation, you have an asset, there must be depreciation there. If you look at your statement here, profit or loss account, there is no depreciation on this your profit or loss account. Are you with me? But if you all know that whenever you have an asset as an accountant, there will be depreciation. It means that the depreciation is included inside the administrative expenses. And depreciation does not involve movement of cash. So you need to remove that element of depreciation away from the administrative expenses that have been added to it before. So we need to remove it. And the question is, how do we know the total depreciation that we're going to deduct from what? That we're going to add back. We will add back depreciation. What is the total depreciation that we're going to add back? Then for you to get that, you need to go down to your movement. So you now go to the another table. You go downward to the another table, which is the movement of PPE. So you go to movement of PPE. So what we're talking about now is we have that figure. So let's go to our workings. Let's go to our workings. Our workings. Okay. Now our workings, we have that the opening figure. The opening figure we have it to be 179,000. Then after that, after we have our opening figure to be 179,000, the other one that we have is for the year. So we have the profit for the year. Profit for the year. And the profit for the year given to us in our question is 140. We have that to be 140,000. Now that we have that to be 140,000, we need to add it together. So let's add it together so that we know total profit that we are entitled to. Okay, let's do that. So addition of these two will give us what? Addition of these two will give us 179 plus 140, and that will give us 319,000. Now that we have that, the next thing after that, what is the closing balance? What is the actual closing balance that we now have? Because what we are expected to have is 119, but what we have as closing balance is 207. 207. So the actual what we have as closing balance is 207. So, and that will be in brackets. So it means that there's a deduction in what we are expecting from what we actually earn. So that will now give us what we know as that's the dividend paid. That will give us dividend paid. So minus 207 will give us 112. So the dividend paid is what? 112,000. 112,000. So we go back to our financing activities. It's an outflow. So we have to go back to our financing activities. So we have dividend paid. Okay, let me onboard this so it's not confused. Dividend paid. Now dividend paid will now be a negative of what? It be a negative of 112. 112. So after we are done with that, the next thing for us. So after we are done with that, the next thing for us is now to what? To compute. Since there's no any other information that we are going to use is what? To now compute for it. So what do we compute? So let's add together. So we have this to be net cash. We have it to be net cash flow from financing activities. For financing activities. So we will have that to be net cash flow from financing activities. So let's add it together. So we add this together. So we have 1116 plus 1006 minus 400 minus 112. And that'll give us a total of 1,000. So that's positive. Positive of 1,000. 1,610. So now the next thing for us is now to add all these figures together. So we need to add the net flow from the operating activities, net flow from the investment activities, and net flow from financing activities. And that will give us the total, the net cash and cash equivalent for the year. To give us the total net cash and cash equivalent for the so it will give us the total amount of money. Okay, so now let's add that together. So that will give us 737 plus 2. Okay, so that will be minus 737 minus 2497 plus 1610. That will give us negative 150. Negative 150. So negative 150. So that will be net. Negative 150. That's net cash flow. Net cash. So net cash and cash equivalent for the year. And that will give us a total sum of negative 150. Now that we have that negative 150, so we now have, we have not used two things. Are you with me? So we now look at, okay, what is the beginning of this? So we come back here. This is for the year. For year 2016, what do we have? So we come back to this column here that we have here in our question. Let's show you what we have in our question here. If we go back here, okay, let me show. Okay, not here. Okay, yes, yeah. Okay, now let me show you here if you look at the cash and cash equivalent here, what we have as cash and cash equivalent here is we have a 4 as at 2017, and we have 112 as at what? As at 112 as at 2016. Okay, now if you look at this as well, where is it? Okay, let me show you another one. Okay, so if you look at your bank draft as well, we have this to be what? To be 267, and we have this to be 145. We have this to be 27, and we have that to be 145. So now the question is, how do we calculate this? It will not be our 145. So we have 145 minus 145 minus what is the cash given to us here? 112, and that give us a negative of 33. So it means our cash and cash equivalent at the beginning of the year is what is 33. And so we have that. So we come back to our solution. Let's come back to our solution. We come back to our solution. Okay, so where is our solution here? Come back to our solution. So now that we are on our solution, we call this. So we have gotten for the year. The next thing that we need to get is net cash flow. So we have what we call the cash flow. So we have the cash and cash equivalent as at January. So as at January 2016. And that, like I said, that will be what? That will be 145 minus 112. 145 minus that's overdraft and the what? And the balance. That will give us 33. So that will give us a negative of what? Is the negative of 33? 145 minus 112. That will give us a negative of 33. So negative of 33. Negative of 33. So now that we have that to be negative of 33, so we now calculate the addition of these two will give us the total. The addition of these two will give us the total cash and cash equivalent for year 2017. For year 2017. So now let's do this. I'll show you. You will check it if you are correct. So we now have cash and cash equivalent as at December 2017 to be how much? To be that's 150 plus 33. That gives us 183. 183, but in bracket. 183 in bracket. So we have what? That will be the end of our cash flow statement. But now for us to check in examination, you want to check if what you have done is correct or not. You go back to your question. So let's go back to the question. Let's go back to the question. So there's the question. So we have the question here. Okay. So we have the. You now check. So you check for 2000 and can you see? Okay, let's see. Cash. This cash and cash equivalent. We have 84 here for 2017. We have 84 here. So the next thing for us is now to So let's go down to overdraft. So overdraft for 2017 is what? Is 267. So 267 minus the cash and cash equivalent for 2017, which is 84, will give us what? 183. Now let's see what we have as our cash and cash equivalent December 2016 based on our cash flow. What we have there is what we know as 183 negative. Can you see? They are the same. 183 negative. 183 negative. So we are good to go. It means that what we have prepared the appropriate statement of cash flow that is required of us. So because of our time, so that's indirect method. Indirect method start with your profits before tax, and after that adjust for non-cash transaction. After you adjust for non-cash movement or transaction, then you now do your movement in working capital. Then you get your what? You get your total cash from operating activities. After you get your total cash from operating activities, the next thing for you is now to find your interest paid and your tax paid. And I said that your interest paid also can be taken to your financing activities. Nobody will penalize you for that. Now that we have solved that, now let me use this question also to explain the direct method. No, the difference between this indirect method and direct method is just the operating activities. So I'm going to solve the operating activities alone. Then the investing and financial activity will remain the same. That one will not change. But what changes between the what indirect, the change between the indirect and direct method is the operating activity, the way they calculate our operating activities. So now let's calculate, let's use direct method. So let's come here. Let's use a direct method. Okay, so I will insert the page. Now let's do direct method. Direct method. So we are using direct method. We are starting with the operating activities. Like I said, I'm going to prepare for operating activities alone. Operating activities. So if you want to prepare for that operating activities, the next thing that you need to do is to calculate. To now start with, there's some items that you normally find there. You see cash from cash receipt from customer. Is that first thing you see here, customer. And that one you see is cash paid to vendor. That's a vendor, that's the people that purchase, that patronize, that you patronize, that supplies what you need. And that one that you're still going to see is cash paid, or let's say cash paid to salaries or any other courses, okay? Or let's say cash paid for other, let's say other. In the last class, I explained this cash pay for other operating expenses. Then after that, we have interest. We have interest paid. Then after that, we have tax paid. So these are the things that we are going to see under that. So let's put naira sign here. Let's put a naira sign here. Why are you rolling? Come on. Let's put, sorry, let me just go back. So let's put a naira sign here. So, and the way make it in thousand, we make it in thousand. Now that we have make it in thousand, so this is what we are, this is all what we need. This is all what we need. But what we need to know is that there will be computation. Exactly, we look at it, they are exactly, is just a few things. But the direct method is that you need to calculate. So our first calculation will now be cash receipt. If we go back to the material that we did, to the topic that we did, to this topic, the last class, the material, you see the format there. So receipt from customer. The first thing I said that we're going to start with trade receivables. We're going to start with trade receivables, opening balance. We're going to start with opening balance of trade receivables. After that, the next one is what? We are going to add sales, the total sales for the year. So sales for the period, I'm going to add to it. Then after that, it will give you a particular figure, which is what? The total money you are expecting from your customer. Then after that, you have your closing. You less your closing balance of trade receivables. Okay, now let's start with that. What is our opening balance? What is our opening balance for trade receivables? If you look at the question, so I'll just scan through the questions because of our time. So if you look at the question here, come. Okay, so we have our trade receivables here. Can you see that? We have it to be 223. We have it to be 223, and we have the second one to be what? 335. 335. So the other thing that we need to know is the sales. What is our total sales? So we scroll up to look at our total sales. Our total sales are revenue, that's 8,380. We have it to be 8,380. So those are the things that we need to calculate our what? Those are the things that we need to calculate. So we come back here. So we come back here and put those figures here. So we have them here. So let's put it there. So we have this to be the opening figures. That's closing figure for 2016. We have to be 223. After that, what else do we have? We have this to be sales is be 8,000, 8,380. So we had the two together. So let's add it together. If we have it together, it will give us a total sum of what? Let's see, it will give us a total sum of 8,603. That's it. So after we have that, the next thing for us is now to what is our closing balance. So we need to less our closing balance from it. So how do we, okay, so we have this in brackets. So our closing balance is 335. So it will be less from it. It will give us a total sum of what? It will give us a total sum of, okay, that's let's press calculator. Let's make calculator. So we have 8,960 minus 335. That gives us 8,268. So it means the total cash. This means this is the what? This is the total cash. The total cash collected from our customer for that period is total sum of 8,268. 8,268. So the next one for us to now to do is now to calculate for cash. So we have another workings. So we have another workings. So we have cash paid to vendors. So let's calculate for tax paid for vendors. What are the information that we need? We need the opening balance. Opening balance for what? Trade payables. Trade payables. And that one we need what? We need purchases. No, it's vendors. So we are relating its purchases. So we need to know the total amount of money that we have purchased. Then after that, we need the closing balance. We need the closing balance. The closing balance of what? Trade balance of trade payable. Trade payable. So after we have that, so the next thing now, okay, what is our opening figure? So let's go up. Let's quickly go up and pick all those information that we need, and let's see how gas goes. So let's see. Okay. So our trade payables is this, right? But remember, we have adjusted for it because there's an element of some items there that we have not initially adjusted. So it means that that's kind of what we need to, we are not going to use this figure. We are going to use the adjusted figure in our workings. And this is the figures that we find to these figures that we did, the workings that we did here. That's what we are going to use to solve this. Let me show you. Okay, this is what we're going to use to calculate our what? Our receivables. So we are not going to use that because it is what the one in the question the adjustment have not been done on it. So we're going to use the one that the adjustment have been done on it, which is 62 and 49. And that one that we need is purchases. So we need our purchases here. So I will need to go to my question and see if I can get my purchases. So can I get my purchases? I have revenue, I have cost of sales. My purchase is not given. So it means that I need to derive my purchase first before I can go ahead to solve for my cash paid to vendors. And what is the formula for deriving the purchases in the last slide I gave you? That even though in the exam you can't remember the formula that I gave you in the last class, you can derive it by making it the subject of the formula. So what we need right now is we need the cost of sales. We need the cost of sales, and the cost of sales is 3,351. Another thing that we need is we need the opening stock and the closing stock figure. Now, for us to get our opening stock and closing stock figure, we scroll down to the current assets under inventory. So we look at the current asset under the inventory. So those figures there is what we are going to use. So if you look at here, the inventory is here. Can you see that? So we have 207. We have 207 to be our opening stock. We have 358 to be our closing stock. And our cost of sales for that 2017 yes is 3,351. If you look at it here, can you see these are the figures that we need? That can you see it here? We have to put 3,351 so that those are the information that we require. So let's go back to the question, to the solution that we're working on. Let's go back to the solution that we're working on. Immediately after the class, I'm going to send this material to you. Okay, so we have that. So now for us to get this, we need this. We have this, yeah. Yes, we have this to be 49. Purchases, we do have purchases, so we have to solve for purchases. So how do you solve for purchases? So let's come down here and solve for purchases. So we have purchases. So let's call this workings 1. So let's call this workings for more workings. So let's call this 1. So let's call this 2. And let's call this 3. So we have that. So we have purchases. So we have purchases. So the formula, normally we have opening stock plus purchases, right? Minus what? Minus closing stock. That will give us what we call cost of sales. This is our formula, cost of sales. Now, what's our opening stock? Our opening stock is 207. Our what? We don't know that, we call it X. Okay, or let's call it Y. So because it won't be so that it won't show like I'm multiplying. So we have that to be Y. So after that, what is it? We have what our closing stock? Our stock equals 358. So after that, what's our cost of sales? 3,000 and what? And 351. So after that, let's make Y the subject of the formula. So Y stand on its own. So after Y, we have 3,000, 351. Then we have minus 207. Then we have plus 358. So we do that, then Y equals 3. So let's calculate that. 3,351 minus 207 plus 358. That gives us a total of 3,502. So we have 3,502. So we come back here and put our purchases to be 3,000. And so we put our purchases to be 3,502. Now that we have that, the next thing for us is now to add it together. So let's add it together. So we add it together, it will give us a total of 3,551. Okay, so the next thing is for us to now state the closing figure. What is the closing figure? We need to reduce this closing figure. The closing figure is 62. So let's reduce that 62. So we reduce that from it. That'll give us a total sum of what? Reduce that. That'll give us a total sum of, let's see. That'll give us a total sum of 3,489. 3,489. So this is the total amount of money that you pay to your vendors. 3,489. So you come back here and put in bracket. It will be in bracket because we are paying out. That's 3,400 and what? 89. 3,489. 3,489. Okay. So now that we have that, the next thing for us is not to what? It's not to, the first thing is not to pick off. The first thing is not to cash paid for operating activities. So, well, how do we do that? We have to calculate that as well. So we look at actual information for workings 4. So workings 4, we have workings 4. So let's do workings 4. And that will be cash paid, cash pay for other operating expenses. Now that we have that, so what we need, is we need the cost. We need the cost. What are the costs that we need? So let me show you. Administrative cost is there. So, but let me show you the cost that we need to put there. The cost is so in the exam, or in case they ask you, so you don't need to be cramming or anything. You just go back to your question and look at the cost. If you look at here, we have distribution costs and what, and the administrative costs. They are the two things that the three or two costs that we need. So we had these two costs together. Okay. So let's come back here. Okay. Okay. Let's see. Let's come back here. So we have that. So we call this distribution cost. So distribution cost. Then we have the administrative cost. So what is the distribution cost? Let me just do this. Okay, so we have it amount here. What is the distribution cost? Is that's 1,676, right? Now, what is the administrative cost? That would be 2,514. Now that we have that, the next thing is now for us to add them together so we can get our total cost. This is the total cost given to us. So let's calculate it together. The total cost will give us 4,190. That's 4,190. So after we have get that, the next thing is now to us to what? All the depreciation less. So we have to the depreciation, the items that's included that does not involve movement of cash must be adjusted. The items, so we adjustment. So call it adjustment of non-cash, adjustment of non-cash transaction. So we have it here. So let's adjust for that. So we adjust for that. That will be first thing you have to come into mind in your depreciation. Depreciation. What is the amount of depreciation given to us? The amount of the depreciation it has been added before, right? It's embedded into it, so we need to remove it. That 8,940. That's it. That depreciation. And that one that we need to need what is gain on disposal, gain on disposal of asset, gain on disposal of asset. Also, we need to what? We need to remove it from it. So what is the gain on disposal of assets? 55. So that's 55. So now let's add it up together. So that will be now a total sum of 894, sorry, 4,190 minus 4,190 minus 894 minus 55. That gives us 3,241. That's 3,000. See, okay. That gives us a total sum of 3,241. So you come back here and put 3,241. 3,000. So we have it 3,241. 3,241. So we have it here. So and that one we have is interest paid. We have calculated the interest paid before, so it remained the same. So we have the interest paid. So what is interest paid given to us? We have calculated that earlier. So we just put it down here. And that will be 540. And that one also, okay, so we have that to be 540. Interest paid also, we have it's the same thing with one that we calculated initially. So we have that to be what you call 515. Now, once we have done this, we are good to go. So the next thing for us now is now to compute. Now to compute everything, add everything together. So now let's add everything together. So now let's add it together. So if we have this 8,268, 8,268 minus 3,489 minus 3,241 or minus 540 minus 155, That what? So let me 8,268 minus 3,489 minus 3,241 minus 540 minus 151. That give us 847. No, something is missing. Okay. That's 826. That was 826. Let me see. 8268. 8268 minus 3489 minus 3489 minus 3296 minus 540 minus 155. What's there? Am I pressing something wrong? 8268 minus 3489 minus 3241 minus 540 minus 151. That's what? That's 841. 841. Okay, minus 55. Okay. This might. Oh, I see. This one, that's what happened. This one should be positive. It should be positive. It should be positive. So let's see. That's 4190 minus 894 plus 55. That'll give us 3,351. 3,351. Okay. Now we have that 3,351. And let's go up to the solution. So let's call this 351. So 8,268 minus 3489 minus 3351 minus 540 minus 155. That'll give us a total sum of, okay, that'll give us 1773. That'll give us a total of 737. 737. So the one I initially added up before should be negative. Sorry, the one I put negative here should be added. The gain on disposal, because it's related to cost. Are you with me? So that's why it's positive. So we're adding it together back to it because it has been actually used to reduce it. It should be on the other side. So we add it back to it. So the if it's lost, we are going to reduce it. It will be negative. If it's lost, it's going to be negative. But if it's gain, it will be positive. That's the opposite side of it. So now we have been able successfully be able to solve that. So if we look at this operating activities there, we have it to be 737 using the direct method. If we check the indirect method that we solve here, where is the indirect method? This is the indirect method that we solve here. If we solve it, can you see? We have also what? 737. So the net cash flow from operating activities under indirect method is 737. The same thing also goes to these ones. The same thing also goes to this the same also goes to the direct method, which is 737, which is 737. So being able to, so that would be the how to prepare the direct and indirect method. That will be how to prepare the direct and indirect method. So we have any question? Any question? So me for 5 minutes, let me ask. If you have any question, please ask me any or your question. Any question, Mr. Kennedy? Hello.
Not yet, sir.
Okay. Okay, but probably when you are going through the question yourself, right? I will advise you to resolve this question again. don't assume that you know it. You can go through the solution. Like I said, I'm going to send it to you now. So you can go through the solution. And if you have any question, you just ask me. But I will advise you when you go through it, just solve it. Start from the beginning and solve it. So we have any question in between, you can easily chat me or call. I will surely attend to you.
Thank you, sir.
Okay, so in absence of any question, I would like to call it a day. Okay, so have a lovely night rest, Mr. Kennedy. Bye for now.